transactions, right, in the Swift network or whichever network goes to a lot of beneficiary banks. It takes a lot of time. There's sometimes not a much clear transparency where your transaction company actually has the beneficiary didn't receive the money. You can't actually track it to that extent. But I think the DeFi actually gives you that particular transparency in that space.
So maybe would one day you'll be working with BlueJ or sharing?
Of course, there's always potentials, right? Because at the end of the day, right, we fintech have to grow according to the use cases itself. And I think DeFi companies usually understand, because we are directly working with all this corporate, we understand the landscape, what are the use cases, and I think, right, DeFi brings the technology advancement to actually improve these use cases itself. So that's how we actually look at it. But of course, that being stated, the regulations are definitely a big hurdle in the DeFi space for us to actually go.
Okay, so there's quite a few meaty topics, and I want to go to something else that's also very, very important, which is security. And also looking at one question here from Slido. Please send in your questions. For Nitin, yeah? How can blockchain companies and players play a role in protecting customers from fraud? So think about security and DeFi.
Okay. So basically, we have done this in our product right now. So first thing is what we have done, like if you see any other exchanges, swap exchanges or DeFi exchanges right now, okay, they don't have security protocol. They don't have security inside it. By that means, thefts could happen, cyber attacks could happen, because of which funds could be stolen very easily. Because they usually connect to the decentralized wallet, and those decentralized wallets are secured with a private key, which is there inside it, and they don't have any authentication or something. So what we have done is we have added a two-factor authentication within our application, which is a swap exchange. So this way, if any cyber attacks happen, they need to enter the 2FA over here.
So your 2FA then is it CDFI then on that component? What 2FA protocol are you using?
We use Google Authenticator over here. It's same like a decentralized thing only, because we don't store anything. So it's under user's control.
There are more decentralized 2FA options, are there? I'm not familiar with the space. I don't know what anyone here knows, but I thought I've seen something like that.
In the swap exchanges, if you see, there's no one offering it right now.
I guess you mean literally like sharding private keys. So
because Google ultimately is still, like Google, right? So ultimately, it's still linked to a centralized company. Yeah.
Yeah, you're right. So it's ultimately linked to it, but it's very popular. Like if you see, if we have to get a two-factor authentication, we have to use a popular company who people are used to it. We cannot just come up with something very brand new which people are never used it. It'll be more difficult for adoption.
Oh, this user adoption, yeah, okay.
Yeah, user. And secondly, what we have done is we have also collaborated with chain analysis over here. So that if any cyber attacks happen and those funds which are stolen, if in case they come down on the swap exchange to get swapped, those blacklisted tokens could be identified and the swap doesn't happen. So that the end user don't suffer from it. Because usually if you see, whenever cyber attack happens, the user funds are first taken to a swap exchange and swapped for an altcoin. Because once you have any altcoin in your hands, you can go to a centralized exchange and cash it very easily. Because those altcoins would be listed possibly on an exchange which is not regulated. So an exit is very easy. But to us, if it's on our platform, it's protected very well. Because those blacklisted coins and tokens will be over there.
Okay, cool. Thank you so much, Nitin. So there's quite a few other questions here, which is quite interesting. I'm going to kind of modify it a little bit, right? So one of the latest questions here, I'm just going to read out exactly first. Please talk about attracting users with unsustainable and fraudulent yield promises by various DeFi protocols. I think it's a very interesting question. Because now when you look at DeFi, a lot of promises, not just DeFi, actually a lot in crypto in general, unsustainable, right? We've seen actually DeFi 2.0 as well, a few projects, protocols fail. So, Nitin, I wonder if you have any thoughts on that in terms of this space, fraudulent or not fraudulent, maybe a bit too tough to kind of say this, but
unsustainable.
Unsustainable, good word, exactly, in this question as well. So unsustainable DeFi promises, how do you think as an industry we can kind of look at that and fix this?
Okay. What we can do over here is what we are trying to do also over here on the blockchain is, where we have a decentralized voting system where each project is voted, and if it gets a consensus of 61%, say for example, 61% of the holders, the coin holders or the token holders vote for it, That's when the token or maybe the whole DeFi concept will be implemented on the network. This could be one possible way, you know, what we are working at the moment to have realistic projects on the network deployed.
Yeah, but then you're assuming also that people are really reading all the documents, which I kind of don't think they are. But let me go to Kenny actually, because Kenny, one of the core business models again is providing all these better yields, essentially in DeFi, right? So how is OSL kind of looking at the space, and how, I guess you're very, very selective, obviously, and doing like a lot of research, right? I'd love to understand from your point of view, unsustainable DeFi and how does it relate to you?
Yeah, it's actually a very, very good question. I will start off by saying that when something looks too good to be true, it might be true. So even without looking at economics, if someone's offering you double-digit yields, you know, for a stablecoin staking, you might question, where is this yield coming from? Who's paying me and who's paying you? Because everyone needs to cut. So that's a classic business model. At OSL, we explored a lot of this, you know, sort of staking and earning infrastructure. We found out that there's a couple of questions or a couple of areas that we're not so super comfortable with. So for the most part, we didn't yes, because we just get around how does, for example, you know, the risk of, let's say if you were putting yields on a proof of stake protocol, proof of stake token, and it went off, the validator went offline, who takes control or who takes the slashing risk at that point? So if you don't transfer that risk to yourself, you will have to transfer that risk back to the end user. And then the end user has to take on that, and they're not willing to do so. They're just saying, hey, I just want to be paid the yield. At the end of the day, they don't care which token and which type, they just want to see a number. So most end users are like that. So I'll come back to the same question that we had for Nitin before about security and about DeFi. At the end of the day, it's all about user or end user capabilities, you know, the end user functions. If at the end of the day it's easy, it's secure, they'll do it. But if you go around turning around and say to them, actually you hold your own private keys, like, well, you know, maybe what we're realizing is that mass adoption for mass users, maybe most of them should not be holding their own private keys. There's a reason why banks were built in the first place.
Question for you, Kenny, and I wonder whether you can kind of share, right? So for the what kind of DeFi yields are you giving your clients? Because you know there's a whole range, right? To 80,000, you know, whatever percentage APY or whatever it is.
Yeah.
But what kind are you offering?
Yeah, to be frank, we're not offering any yields for the tokens at the present moment. I think looking back at the type of tokens that we offer, some of them are proof of stake, some of them are not. So you can't offer a yield for anything unless somebody else pays you a yield. So that becomes what we call third-party risk. If I'm offering a yield, where am I getting the yield from? I'm getting it from a third party. And when the third party comes along, you have to give them the same vetting that you would, because you have to give that, and you place that trust to that third party back to your customers, because the customers come in for the service that you provide at OSL. So I would say that right now we're not providing any sort of yield bearing products right now. It's just not in the institutional landscape that we see.
Okay, cool. So we only have several minutes left, and I want to go on so many topics to cover. But so going back to the topic at hand, DeFi, where do we go from here? For this year, for the next kind of 2 years, what do you think are DeFi's biggest problems, and what do you think the DeFi industry should work on? Let's start with Carly.
Yeah, I think in terms of like big problems itself, right? I think the scalability risk is definitely something I think DeFi has to work on. And technically, right, when it comes to the transaction numbers at this point in time, with like Ethereum's early days itself, it was probably around 15 transactions per second. But I think with 2.0, with the whole proof of stake stuff, they are able to do 50K transactions itself. But if you compare it against like Visa, it's around 65K. So whichever companies, let's say they are going to be looking into exploring this solution, you do need to actually help them with managing that number of transactions. And I think that is one huge thing that DeFi has to look into. And I think the biggest elephant in the room is still regulations, because one of the main things about regulations is that, let's say for SEC itself, right, they were able to go after Coinbase because it was a centralized exchange when they were offering, I think, a 4% savings on a product itself. At least for that company, right, there was a company, there was a CEO, they can actually go after them. But how about DeFi space? Like, who are you going to, or rather, are you going to be serving a node? Like, are you going to be banning nodes, or are you going to be like, banning nodes in different economy? Is that how you're going to go or regulate it? Or are you going to be actually looking into regulating the users itself? But the point of any SEC or MAS, right, is to actually safeguard the users. So I think the main thing that we have to look into is to how to have a regulatory perspective where you can regulate enough to actually minimize users being exploited, but also, right, you want to be a little more open to new creations like DeFi so that you can actually use this particular space to improve your economy as well.
I'm going to jump to Nitin from your point of view, because you linked to about security and all, and this is kind of what you talked about as well. So I would love your answer, Nitin, to the question again. So what problems should DeFi focus on right now?
I would say security, most important thing, because safety of user funds is the highest priority. If the user funds are secure, that's when the user interest will come in, and that's when the DeFi concepts will become more popular. So that's my take on it.
Okay, cool. Sherry?
I think one of the biggest challenges that DeFi is going to have in the next few years is actually bringing in new and sustainable capital. So I think that a lot of the innovation that has happened over the last few years in DeFi has been in a lot of these, I would say, reflexive constructs through these different primitives. And I think they served a purpose, right? So they brought in a lot of technology talent, they brought in awareness into the space. But I think we need to do more than what we have in TVL today in DeFi, and that actually does come from either bringing in new capital like institutions utilizing DeFi, or new retail users, or creating more I would say crypto native or metaverse native economies where you kind of have these like self-sustaining financial services that are crypto native. So embedding essentially lending and borrowing into things like games, for example.
I'm going to return to you very quickly. Kenny, I would love your point of view on.
Yeah, I mean, I think I disagree. I think
First disagreement, yes,
yeah,
finally in the last few minutes.
It's taken us a while to get to this point, but the concept of innovation and jumping into a metaverse, you're talking about crypto natives. So, but if you look at the mass adoption, and you look at in the room here, the guys that are not in crypto yet, those are the guys that we want to target. But if you ask those non-native crypto persons to jump into DeFi and then jump into a metaverse, they're like, it's way too hard. I still think what exists and what is required to make DeFi go even further is actually a bridge. There needs to be some intermediary that explains exactly what goes on and makes it comfortable in a way that people understand. So people are used to certain norms and certain cultures today, using your bank, lining up and queuing for retail. That's really what they're used to for the last 30, 40, 50 years, no matter how old you are. So if you make something that's usable, something that's comfortable, that's more familiar to them, you'll get more adoption from that standpoint, because you say on the back end, actually, it's a DeFi protocol that's providing you this.
So, Kenny, from your point of view, then you're saying that you think that quote unquote a killer use case for DeFi is finance rather.
I guess you could say that. Yeah, it's existing today because people still need lending. They need to have, they want to collateralize their receivables, as an example. They want to have fast forward payments. They want value transfers across the world. They want borderless payments. They don't want to deal with FX risk for the Philippines because the cost base is in pesos. They want to be reimbursed in pesos so that you're neutral at the end of the day. So yeah, I would say in a way. You're still dealing with the traditional finance type of quandaries, and DeFi will solve most of it, I think, because I think at the end of the day, years from now, we're all going to be replaced by robots anyway, so it doesn't matter. At that point, we can all use DeFi.
Talk about yourself. All right, Kenny. Okay, I love that. So just ending off with you, Sherry, because disagreement here. Response, please.
I was about to say I want to respond here. So I don't think we're disagreeing here. I actually fully agree that what you're basically saying is the first part of what I said, which is this like off-chain to on-chain bridging, right? So how do you actually bring in existing fintech, financial institutions into DeFi, right? But the second part I'm talking about isn't necessarily crypto native in the crypto native sense, but if you think about how some of the hundreds of millions of people who came into crypto over the last few years, it was not for DeFi specifically. It was for things like gaming. That is metaverse native, but it's a use case that people understand. People understand why it's fun to play a game. I also think that SocialFi or bringing in social is a next avenue for people to get into crypto. Now, for all of these, they're going to be powered by some kind of financial application in the back. And so what we've seen in Web 2 is that there's all of these different kind of payment applications that were plugged into existing Web 2 social, etc. But I think the same thing will happen in Web 3, where you'll have more and more people coming into the space for social, for gaming, for all these other applications. DeFi will be embedded in the back end when people want to make any transactions, borrow, lend, or engage in financial services.
Amazing, thank you, Sherry. We'll continue the semi-heated debate offline later. But okay, thank you, Carly from VoloPay, Kenny from OSL, Sherry from Blue Jay Finance, and Nitin from Panorama Finance. My name is Gwen from BNB Chain. Thank you all for listening.
Thank you so much, Gwen, and our panelists. Looks like I think we do have our few photographers around. Our main photographer, would you like to capture a shot? Yeah, so Gwen, please join us on stage. A nice picture before lunch. Alright, we'll get you to smile for our official photographer, and lots of photographers in fact for this session. So please continue to smile. Beautiful. Nice. It's kind of like a meet and greet fan club going on here on stage. So if you're wondering what's happening right here, well, we are down to our first half of the day with our last panel discussion, and we will be going towards our break very soon, okay? So hang tight for that. Thank you so much, panelists and Gwen, for the lovely session. Thank you. We have recess. Alright, ladies and gentlemen.